Well, crude futures selling off in a major way today after the International Energy Agency announces it will release 60 million barrels of crude onto the world market. Let's bring in Alan Knuckman, Chief Trading Advisor, One Stop Options. The timing of this, I think, is so interesting. What the IEA is saying is, look, this is in response to supply disruptions from Libya. We're months away from the height of the crisis in Libya. So why the timing here? Is this political, coming after Bernanke's comments?
I think it's largely symbolic. It's giving politicians a bit of a chance to kind of kick the oil market while it's down and get a lot of good positive publicity. We've seen oil break below the $95 a barrel level, which was crucial on the upside in January and February and a little bit in March. That was a level we could not get above. Once we did, we kept going straight up. So we've come back to that breakout point, and we've gone a little bit below it. But let's look at this on a weekly basis, not on a daily basis, because oil is a market that's very, very emotional and overshoots on the upside and the downside.
Let's look at the long-term impact here. We broke through $90 a barrel today after this news for the first time since February. Does this mean we have a crude market between 85 and 90? Does this push crude to, between 60 and 70? Saudi was pushing for this at the last OPEC meeting. What does this mean long-term for this marketplace and therefore gas prices?
This is only 2 million barrels a day, and all this is trying to do is supplement, the Libya situation. Libya is not a major producer. Again, this is really symbolic, but I think oil traders have been disappointed that we haven't been able to form a base. We were above 100 just last week, so you've got to understand how quickly things move. You've got to look at the bigger picture, and like I said, there's some solid support down below here that, there are a lot of things that can happen, unfortunately, or fortunately for bullish oil traders, that can push oil prices back up very, very quickly. So you've got to understand the psychology of the marketplace, and a lot of people have gotten somewhat negative, but this could actually boost stocks as you see costs get lower.
Right, but it's not right now. You see the Dow selling off 200-plus points right after this announcement came out from the IEA, so the marketplace isn't pricing this in as what some are calling a shot in the arm for the U.S. consumer. It'll make people spend more money, boost companies. That's not what the market's reacting like right now.
We're not seeing an immediate reaction here, and sometimes there's a little bit of a delayed response. Like we saw a delayed response yesterday with Bernanke. The market didn't sell off till after he had spoken. We actually went positive, and then the market digested the move and and sold off a bit. So sometimes there's a bit of a delayed reaction. That's why I'm a longer-term options trader. I trade options in December crude, for example, looking for the bigger overall picture. But you still have to have confidence in the overall trend being positive. And unless the dollar really strengthens, I look for assets in general to continue to do well and look for crude oil to respond positively.
You're the optimist in this. I'm going to play the pessimist. When I look at the unresolved situation in Greece, when I look at the economic reports that we've had on manufacturing, housing, and jobs, when I look at Bernanke's comments that were, frankly, a bit unnerving on Wednesday, I see this push for lower energy prices as a very small player in this questionable global marketplace.
Well, those are all things that you could get nervous about, but to get to Bernanke, now his job is to make sure that he doesn't spark the economy or spook the economy. So he's got to play both sides of the fence. He did a fantastic job with the QE1 and QE2 of reflating assets. If you remember, we were concerned about deflation. So we've reflated assets. The stock market's recovered because of that. Commodities have recovered because of that. So you've got to understand what he's doing now is just telling people that eventually it's not a matter of if, it's a matter of when they're going to raise rates. So again, that's not going to happen tomorrow. It's not going to happen next week, and obviously it doesn't look like it can happen anytime soon. Greece is not a major player in the global economy, and that exposure is very minimal. We've been through this movie before. But remember, the market knows all this information and understand that. And that's why we are where we are. We're trying to forecast where we're going. And, I think things are getting better as opposed to getting worse in the bigger picture if you look at it on a month-by-month and a week-by-week basis.
All right, we'll take that little sliver of hope. Alan Knuckman, thank you so much.
Thank you.